Australia's property market has officially split in two. On one side, a sun-baked boomtown recording growth that's leaving economists speechless. On the other, a sleeping giant that's quietly becoming the most affordable major city in the country. This is the 2026 Perth versus Melbourne property showdown, and by the end of this video, you'll know exactly where the smart money is going and why. Welcome back to Aussie Money Guide. I'm your name, and today we're doing something a little different. Instead of covering the whole national market, we're going head-to-head, Perth versus Melbourne, because right now, these two cities represent the two most compelling investment stories in the country, and they couldn't be more different. Let's start with the facts on the ground in early 2026, because they're genuinely extraordinary. Fresh data from Cotality reveals a sharp split across Australia's capital city property markets. Perth jumped an astonishing 2.3% in February alone, adding more than $22,500 to the city's median dwelling value, which now sits just shy of $1 million at $989,211 in just 28 days. Australian property update. Meanwhile, in Melbourne, the city's median dwelling value of $826,132 recorded no growth at all in February and is actually down 0.4% over the last 3 months. Australian property update. Two cities. One country, two completely different investment stories. Perth has been the poster child of the Australian property boom for 3 years running, and analysts who kept calling the top have been burned repeatedly. So what's actually driving this market? 3 words: supply, population, and economics. REWA President Suzanne Brown says Perth prices continue to be driven by a significant imbalance between supply and demand. Population growth hit 2.2% in the year to June, the fastest in the country, while new listings in the established homes market fell below long-term averages in the back half of 2025, causing FOMO to return and price growth to accelerate. REWA KPMG's chief economist Brendan Rinn puts it bluntly: Perth continues to record the fastest population growth in the country, and limited housing supply is keeping upward pressure on prices. Smart property investment, and the forecasts reflect this reality. KPMG's latest residential property outlook predicts house prices in Perth are set to soar by almost 13% over the next 12 months, the highest forecast of any capital city and far exceeding previous expectations. KPMG units are anticipated to grow by double digits too, rising by 11.6%. Smart property investment. REWA is equally bullish. Their forecast has the median house price rising more than 10%, while the median unit price could see 15 to 20% growth, both medians having ended 2025 at record highs. REWA. Here's what makes Perth particularly compelling for investors right now: relative affordability. Despite 3 years of extraordinary growth, Perth residents enjoy a low mortgage-to-income ratio compared to other capital cities, and state government incentives are expected to attract and support even more buyers in an already heated market throughout 2026. Here, property, the risk? Long-term research reminds us that Perth has historically been one of the higher volatility property markets in Australia. Propertyology. What goes up fast can cool fast too. KPMG's own modeling suggests that after a stellar 2026, Perth's growth rate could moderate significantly heading into 2027. Timing matters here. Now let's talk Melbourne, because this is where it gets genuinely interesting for the patient, strategic investor. Melbourne has been the underdog of Australian property for the past 3 years. Victoria's land tax changes hammered investor sentiment, supply increased, prices stalled, and the city, once reliably the nation's second most expensive market, has slipped to a position that, frankly, would have seemed unthinkable 5 years ago. Melbourne's median house price now sits only slightly above Adelaide's and below Perth's, highlighting how dramatically the rankings of Australian capital city property markets have shifted. Owner-developer. But here's the contrarian argument. and it's compelling. If Melbourne is to move back into a significant growth phase, its current status as the most affordable major capital city relative to income could be what attracts buyers and investors and drives any rebound. API Magazine. The big institutions are starting to take notice. KPMG forecasts Melbourne house prices will increase by 6.8% and units by 7.3% in 2026, driven by genuine underlying demand. KPMG's chief economist noted that Melbourne's comparatively lower price base is likely to provide room for further growth and help sustain momentum over the coming years. KPMG, even more striking, KPMG says Melbourne would be the only Australian capital to experience stronger housing market growth in 2027 than in 2026 smart property investment, meaning the big upswing could still be ahead of it. What about supply? New property listings are approximately 12% higher than the 5-year average in Melbourne, increasing buyer choice and slowing price growth in the short term. But Melbourne continues to experience strong population growth driven by migration, which supports long-term housing demand. Owner-developer, the headwind? Victoria's investor tax environment. Higher land taxes and additional property levies in Victoria have reduced investor enthusiasm, and some investors have shifted their focus to other states with lower property taxes. Owner-developer. If you're a property investor, you need to model those holding costs carefully before committing. Let me break down the head-to-head right now. Median dwelling value, Perth sits at $989,211, Melbourne at $826,132. Australian property update, Melbourne is cheaper by nearly $163,000. Forecast price growth, 2026, Perth, up to 13% for houses per KPMG, 10% plus per REIWA. Melbourne, 6.8% for houses, 7.3% for units per KPMG. Rental yields, Perth rental growth of 5.6% year-on-year is well ahead of Melbourne's 1.4% growth, with REIWA forecasting median weekly rents to average $700 for houses and $675 for units by year's end. Here, property supply dynamics. Perth is critically undersupplied. Melbourne has 12% more listings than its 5-year average. Population growth. Perth, fastest in the country. Melbourne, strong but normalizing. Investment tax environment. Melbourne carries ongoing land tax headwinds. Perth does not. So here's my read, and this is not financial advice. Always do your own due diligence and speak to a qualified advisor. If you're looking for momentum, rental yield, and near-term capital growth, Perth is hard to argue against right now. The fundamentals, population, supply shortage, relative affordability, government incentives are all aligned. Several years of aggressive price growth are pushing borrowing capacity toward its limits, but growth remains positive. Property update. The window for entry-level properties, particularly units and townhouses, may still be open, but it won't be forever. If you're a longer-term contrarian investor with patience and a 7 to 10-year horizon, Melbourne could be the smarter play. You're buying at or near the bottom of a cycle in Australia's second-largest city, with KPMG modeling showing its best growth years may actually lie ahead. The land tax situation is a genuine consideration, but for interstate investors buying through the right structures, it's manageable. The truth? The smartest investors aren't choosing between Perth and Melbourne. They're looking at both, diversifying across a high-growth momentum market and a value recovery play. Australia's property market has never been more divided, and that division is exactly where opportunity lives. Perth is blazing, Melbourne is simmering, and both deserve a serious look in your 2026 investment strategy. If you found this breakdown useful, smash that like button, subscribe to Aussie Money Guide, and drop your question in the comments. Perth or Melbourne? I read every single one. And remember, property is a long game. Do your research, get qualified advice, and invest with your head, not just your heart. See you in the next one.